Hello everybody, it's Greg here from Master Trader. Recently I've been sharing some of my responses to students' emails, which I often send them a video type of email explaining with a chart their question. Makes it a lot clearer for them and to see it visually as well as hear me explain it. So this question was about pivots, and it said, "Hello Greg, trying to master pivot points to determine support and resistance areas. Can you review the attached for feedback and the attached daily 1 year, 6 month, and 3 month charts?" Okay, so to do that, we first have to make sure the student understands things in a clear way based on what we call Master Trader technical strategies. So I said first, we must define a few analysis concepts used in Master Trader Technical Strategies, MTS, with clear black and white method, and we're going to remove any uncertainty. So the first question is, well, what is a pivot? They're asking, they want to determine pivot points, be clear on that, and support and resistance. Well, a pivot point has a definition. We define it as a bar with 3 higher lows. We call that a pivot low. That'll be to its left and right, or lower highs, a pivot high, to the left and right. So some software packages, this has often been asked, well, where do I find this in my software? Because they say, well, I don't see anything called a pivot. Well, some software packages call these fractals, and I have no idea why. But if you look in your software and you'll find fractals, just put the setting on 3 and it'll mark off those pivots. What are we going to do with these pivots? Well, one thing to understand is once the market, traders, institutions, who's ever trading, has created a pivot low, a bar with 3 higher lows to the left and right, it has created a support area that wasn't on your chart before. Right? It's a new piece of information that wasn't on the right side of the chart when you started looking at it. If you look to the left, you'll see prior pivot lows there that were created in the past. Well, are they all relevant or not? Well, we'll get to that. And pivot highs. They're defining an area of resistance that wasn't there before. Or if we look to the left, there'll be pivot highs. That will be areas of resistance, potentially. And are they relevant to us in the time frame that we're looking at? We'll get to that. So how to define an uptrend? Pretty simple. 2 or more higher lows and higher highs. That's an uptrend, black and white. What is major support in an uptrend? That's the pivot low prior to a higher high. Why is that significant to us? Because if prices violate major support, the pivot low prior to a higher high, it's no longer in an uptrend. It's transitioning to a sideways trend. It's not in a downtrend yet. So we're being objective about the information that we're looking at. It's violated its uptrend. Now, some of you might be thinking, well, I'm going to draw trend lines to these swings, and if it violates that trend line, it violates the uptrend. Not true. Depending on how that trend has evolved, you can violate an uptrend line and not violate major support. Trend lines are subjective. You should not use diagonal trend lines. Everything we view is by looking to the left. It's a horizontal trend line. How do we define a downtrend? Pretty simple. Lower highs and lower lows. What's major resistance in a downtrend? The prior high to the prior to the lower high. Should be lower low. Sorry about that. The lower high, lower low. So let's look at the charts and look at their question here. So they wanted to know about support and resistance and pivots, and they provided me 3 charts. Why? Well, obviously this student thinks that looking at these 3 charts are relevant in some way as you look further distance back. So if they're looking at 3 months of data, 6 months of data, this chart down here is a year of data. Is that relevant to us? In this chart that we're looking at, which is the NASDAQ 100 ETF, the Qs. So as I look at this 3-month chart, they have marked off the pivots. Looks like they've done it manually. I don't know if they found fractals in TOS. I believe that's what it's called, and it's putting these arrows there. I'm not sure. I don't use TOS. But let's assume that that's what this is doing, and it's marking off those pivots with these arrows pointing to the right. So on the right side here, prices were trending up, and then they began to trend down and violated this prior pivot low here, right? The low prior to a higher high. It violated the uptrend, a deep retracement. However, it fell so far to get down here. We have a concept called a greater than 100% retracement, where we look for prices to begin to stabilize after that event. And prices did. It was actually this exhaustion gap that happened here. Now, she's marked this off as major support. Is this major support? Well, this was your major support, and it's been violated. For this to become major support, it needs to make a higher high. So while this would be a reference point of support, if prices came back down here, we would not define it as major support because it has not made a higher high yet. Right now, prices are in a trading range. Right? There's resistance at the top. There's support down here. Which way will it break? Will it break out of the trading range to the top or the bottom? We don't know. There isn't enough information yet. I can see some bullish price action. This big red bar was ignored, and prices are moving up. Maybe they can move up to the top of the range. But if we go further back in time and look at the 6-month chart, is what's happening prior to the 3 months relevant to us at this time now? Absolutely not. I don't care about any of this. What's relevant right now is what's happening here within this trading range. And the question is, can prices get back above to the top of the range? Can they reach the top of the range? Will they break down through the bottom of the range? I don't know. But that's the question right now. So looking further back here at this earlier time, March, April, May, doesn't matter. It doesn't mean you can't look at it, but there's no point in focusing on any of that because it's not relevant to the moment. I'm going to explain what's relevant to the moment. And if we look back a year in time, going back way back here, none of this information is of any benefit to us to look at it or even think about it. Less is more. Now, if you bring up your chart, I wouldn't bring up a chart like this. Why? Because I wouldn't scrunch all the data together in that way to see what's all the way back there. I'd want to see clearly defined candles. Now, a chart like this, maybe with a little bit more data, the 6 months, maybe a little bit less, that's all you need. If you want to look at another chart with more data, it could be on a separate chart, or you could be looking at a weekly chart to see what's further to the left. But my point is, looking way back over here, when our focus is what's happening here, a trading range, it's irrelevant. We don't need to look that far back. So let's look at this point in time right now, what's happening today. And so if I scroll back and I look at the chart from this point of view, what's happening back here, right, back here, right now, is irrelevant. What's relevant is the same information, that prices are in a trading range and can it reach the top of the range. As of today, and I covered this pre-market in a video, which we do on YouTube every day at 9 o'clock, I mentioned that prices were going to gap into this unfilled gap, and that was going to be an area of resistance. Now, whether, let's not put that there, whether it stopped there, I'm just going to put that over here. If it stopped there, right, or got a little further higher into that area, I don't know. But I know the beginning of that resistance area is going to be right there as it fills that gap. And as it happened today, it got up there for a little while, a little bit higher, and then it collapsed. And right now it's at around almost 1:30 in the afternoon, and prices are down near the low of the day, and they're beginning to stabilize at this time. Now, as I look at these pivots that are further back here, right, there's one right there. There's one right here. They're not relevant to me right now. There's no market play in those areas. However, what I would point out at this point in time is that this trading range, which we've already defined, if prices should decline back down to the bottom of the trading range and subsequently fall through the bottom of the trading range, violating this support area, will this low hold? I would say not. Why? Because historically, after sideways movement over time that moves prices far away from a single pivot point, it's not going to be that potent as a reference point. So, as we look at larger areas of overhead resistance in this case, and then prices violate that support, to think it's going to stop here is unlikely. Will it stop here? Well, it kind of depends on how long it takes to get down there. The faster it falls, the greater the probability of a bounce. But how far will it bounce from there? Well, we'd have to see. Now, as we start looking further to the left, right, if we, for conversation, assume that prices violated this support area, as we start to look at these larger areas of price support down below, where there's been this sideways congestion, we would believe that this would be a stronger area of support where prices, if they were to come down to that area, we then might begin to see price patterns like this begin to form, a retest pattern down in this area, this location of this larger area of support, and begin to make a pivot. Right? We defined what a pivot was: 3 higher lows to the left and right, and if it came down there and created a pivot, we would then have a new reference point of support that was created. There's nothing there now. Common sense. It would then create new support. Now, being in this same area, creating support would make sense based on what I've already said. And if we could get a retest pattern, which often happens after prices fall like that, there's a retest pattern, and that sets up a buying opportunity for prices to move up, just like it did here. Now, the resistance is relatively close, and it's probably not going to get much higher without some back and forth if it can go higher. But maybe it's going to fall all the way back. We don't know. But again, to reiterate, what are we dealing with here? We're dealing with a trading range. Immediate support is right here, and immediate resistance is right here. And all of this information over here, it doesn't matter right now. This is our focal, this resistance area, and this support area, and what's in between here within this time frame. So I hope that helps. If you have any questions, email me, Greg@MasterTrader. And I hope this, as I said, helps, and use this in your trading. Keep it simple. You don't need to be drawing diagonal trend lines. You don't need to be drawing fib lines. You just simply look to the left and see where there was prior support, where there was prior resistance. There's no proprietary levels and all of that hocus pocus. So keep it simple, stupid. It works. We'll talk soon.